Hi everyone, so welcome to Investing for Value. So as you can notice, we're in a bear market, and while as much as the bull market was great, the reality is we're in a bear market and it's horrible. Things are dropping, or maybe it's not that horrible if you're buying, but if you're holding and you can't buy, it is horrible. You're probably in a lot of fear. And the one thing I really want to say to you, first tip is be calm. Markets always come back. Um, the one thing you can probably do is just watch the market less. Go do your own thing. I mean, it's hard because you're probably really interested in the stock market and you're watching it day to day, minute to minute sometimes. I probably do that too. So, and I recognize that maybe it's something that it's just something that you don't need to do all the time. And you find yourself having more time when you watch the market less. If you're not buying or you're not selling, you should just be spending your time elsewhere. Go visit family, go visit friends, with the appropriate distancing. Do not get in crowds. Keep your hygiene up, of course. Or go take up a hobby. Hobbies are really nice. Like the one thing an investor should always have is a lot of hobbies. Do not make investing your life because, like it's great to spend a lot of time on it, but I think people should be more well-rounded. I was recently going through the garage and I kind of just stumbled across a painting that I did. So this was done like 10 years ago, and it's just really nice to just come across it and then go like if you start something like this, it's just really beautiful to have something that you've done. And if I look back on my life and I go, if I took out stock investing, which is a lot of my life to be honest, as much as it can be a bit sad basing your life on one like central topic, it's also good to be well-rounded and to focus on other hobbies. Go learn a language, or go do some cooking, learn some new recipes, or go build something. Go go be productive. Watching the market all day is not healthy for your mind. And yeah, like if you're not buying, you're not selling. It really adds nothing to you because if you're holding long, go do something. Go read a book. If anything, read an investing book. If you love investing a lot and you don't think you can keep away from the market, go read an investing book, and that's going to teach you more than anything else. Because like you could like look at the market, you could panic, but it does you no good. So firstly, I just want to go like stay calm, watch the market less, and that's the first step, right? Um, and the second tip is if you are invested or you're keen to keep investing and you're looking for opportunities to buy, well, every time you buy, I want you to make sure you've got enough cash on the side so you can average down. Like if you can't average down, the problem is picking a bottom is very difficult. So you want to keep money on the side to be able to average down. Do you know what is probably worse than trying to pick a bottom? Not knowing where the bottom is. And that's probably what I'm seeing right now. I'm seeing a lot of people going, well, we're going to buy now, we're going to hold for the long run, and we're going to hope that things do not go down. It's kind of like cruises, airlines. A lot of people were buying them at very high prices, and their view was, hey, things come back. Yes, things come back, but you do yourself a big disservice by buying too early and not having the ability to average down. So when you buy something, do not go all in, buy half, or if you really have to, 75% at most, still keep 25% cash on the side because you cannot call markets. Like no one can call these markets because currently we're not dealing with a financial problem entirely. We're dealing with a medical problem, and trying to call a medical problem, not even a medical experts can call this. And um, for some reason, everyone in the financial industry has become medical experts because they read more. I mean, yeah, fair enough. You educated yourself, uh, but by no means can you call what this is. Things are going to get a lot worse before they get a lot better. I just want you to remember that they'll get a lot worse before they get a lot better. And with that in mind, you want to be able to hold, you know, like you want to be able to buy and be able to buy again to average down to put yourself in the best advantage. Like, sure, you could buy, if you buy a stock at $30 and it comes down to $20, and you go, oh, okay, I'm going to buy it all in at $20, and that $20 stock comes down to $10, that's really difficult to stomach, isn't it? But if you left enough money to average down, then yeah, it could, that, and then you're probably like going, that's there's no such thing as that's no stock has done that, has it? Yes, it has. That was literally Carnival. So um, as Carnival Cruises is going through a tough time, its stock price could be sold down even more. Like we can't tell. Like we know in the future it comes back. Okay, we know in the future it comes back. But the thing is, it's in so much pressure right now because it doesn't hold that much cash. It's got a lot of bills to pay, and it's got a lot of debt to pay up as well. And it needs a bailout from the government, and it's at the mercy of the government. So firstly, when you're a stock investor, you want a lot of control through your decision making, right? But the minute prices fall, a lot of stock investors do not want to sell at a loss, and they hope the company comes back. Well, here's the situation: the company doesn't even control its own fate, which is the worst thing ever. If a company doesn't control its fate and it's relying on the government, but if the government has assured the industry it will come and bail them out, and yeah, I think you can take a little bit of you can feel a bit at ease that the government will come and bail them out. After all, say like Carnival Cruises, it has 40%, well, 42% of the market share around the world. So all of a sudden, you're not going to get something like that to collapse. You're going to bail it out. Um, but I don't want you to start investing like you know the bottom. But I want you to invest like you are trying to pick the bottom though, because the problem with everything is if you don't know the bottom and you can't even and you're not even trying to pick a bottom, yeah, like you're buying at very very high prices. You're doing yourself a disservice in that fact. Where if you've just waited a bit longer, you could have been buying at a lot, better prices. And that's bit like at the end of the day, if you still have the cash, you have the most control. Okay, we want you to remember that. And the fourth tip is buy strength. Why are you trying to buy companies that are in its weakness? Like basically right now, a lot of companies are being sold down, and well, there's a good reason for why a lot of them have been sold down, but there's also a lot of reasons why some of them have been, sold down in an unreasonable way, or there's some that have just been sold down because of very temporary issues, but they can very well manage it themselves. And you have good quality companies. Like you look at Starbucks, they're managing themselves. They've got so much cash, and they're very confident in their situation that they're actually buying back shares. So you kind of weird when basically like a company that you think might be in trouble is buying back shares in the worst time. I'm not too sure buying back shares right now is a great time. Definitely cheaper shares, but yeah. But it is one situation where you can buy really good quality companies at really discounted prices, and you're better off buying strength and good quality companies. Like why is this big rush to buy airlines and cruises? Why don't you want to buy a company like Disney? Like the price can come down. To be fair, the price can come down for Disney. It's like $80, but it can come down even more. But I just want to use this as an example of a company that is very good quality and it's only suffering because they're closing down Disneyland's. Live sports is not going, so who's subscribing to ESPN? And movies. Who's going to movie theaters? Even if there's people going to movie theaters, um, there's not going to be a mass crowd. At the end of the day, Disney is going to suffer, but it is a very good quality company. We can all admit that if everything's okay, that open Disneyland, sports starts again, movies are back on in theatre, we'd all go see everything. We'd all participate, and this company would be fine on a normal year. So that itself is a strong and good quality company that can hold itself. Unlike airlines, who are not able to control it, cruises either. So if you're gonna weigh it up, why don't you buy the good quality companies? Why are you so caught up in chasing these companies that just that you don't need to? And speaking about chasing things that you don't need to, well, that's another tip as well. You don't need to take unnecessary risk. The market cycle is very long. Things are nowhere near the bottom, so why don't you wait? You don't even have to. You don't have to invest right now. Keeping some cash in the bank is really powerful. It gives you a narrative, and you control everything. So that's the thing. Hold cash as long as you can, because as long as you hold cash, you always hold the narrative. If you do not hold cash, then at least know your company is very strong, or if they're not very strong and they need a bailout, at least know how the government's going to act. Have all the knowledge so you control the narrative. And that's how you survive a bear market, or else it's going to really eat at you. There is going to be a lot of fear, and it's not going to be healthy. Um, so first tip, don't take unnecessary risks. Second tip, make sure you can average down. Third tip, stay calm. Fourth tip, hold cash as long as you can, so that you always stay in control. And the fifth tip is just buy really good quality companies, and it will really serve you well in the long run. So, I want you to take those 5 tips. I want you to reflect on how things are. Do not look at markets that much. Take a bit of time to reflect on how things are. Enjoy yourself. Like, life's not all about financials. It's great to have financials. It's great to have freedom around the financials. But at the end of the day, you still have to live your life. You still want to make the most of every day. So I want you to consider, um, you know, the wider picture. Do not be so caught up in your financials that you miss out on everything else. It's like um, when you're reading a newspaper outside and you're like so caught up in what that article is saying, like financial meltdown or something, or recession, that you forget that the sun's rising, the environment's all beautiful and all this, unless you're trapped inside and you're not allowed to go out and you're isolated. Then yeah, like go do something else. Remember, like make good use of your time, because like the one thing I'm extremely happy is that I took up hobbies. It's like when I look back at this painting here, I'm like, oh, like it's really nice to build something that in 10 years you'll be really happy about. Like you might feel like that's very amateurish in terms of a painting, but this was 10 years ago. Like, I probably have to show you what my paintings are right now. They're probably not that much improvement, to be honest, but um, it is a skill that I've enjoyed doing. I've enjoyed being, having that diverse, but as they put in the stock market, diversification. Like diversify the amount of time that you spend on things. Of course, it's great when you're very passionate about something and you want to spend more time on it. But if that spending more time on something is causing you unnecessary stress, unnecessary panic around markets, um, just take some time away. It's like technology. The problem is technology has so much control over our lives these days, that we're spending so much time on it that we should probably give ourselves a break from technology. It's like if there's a time to go enjoy the outside, now's a good time. You know, do not waste your time always just sitting in front of a screen if you don't have to. Go enjoy things. I hope that was somewhat helpful. Like that's just how I'm thinking anyway. And I thought I'd just make a video and just talk about it because at the end of the day, we're it's sooner or later we're just gonna be stuck inside, and we're gonna be at our own. We'll be alone with our own thoughts. Well, it'll be our family, our friends, and all that. But nothing's more, going to be more eating away at your mind than the stock market. Particularly if you're watching this, you're likely really enthusiastic about investing, or you can't wait to start investing. But either way, you're by watching to the end, especially right to the end here, you've proven you are, in terms of passion, you're above average in terms of passion. You're proving that this is something you want to do. This is something um, you want to improve at, and that's fair. That's very fair. But also, just make sure you take some time for yourself to take yourself away from technology for a moment. Take yourself away from financial markets for a moment, and that's when it gives you clarity of mind. I find when I watch the markets too much, it clouds my mind, and sometimes I'm not able to make the best decisions. So sometimes it's just best to take a bit of time, just think through things before you make decisions or take on risks that you don't have to, or overinvest. Remember, there's so much more to life. Okay. And yeah, if you just want to add some free value to this, like and subscribe because that does a lot for this channel and things going forward. Until then, good luck everyone.